Hello and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Monday, October 5th, 2020, and I'm pre-recording this Trading Places Live for Tuesday, October 6th. Futures currently are relatively flat in after hours, so after a really nice day in the market on Monday, really no clues yet as to what we might be looking at on Tuesday morning. I guess we'll find out more when Tuesday morning arrives. Of course, by the time you hear this, Tuesday morning will be here. Got a lot to go over, but I'm going to start. Let's go through the agenda for today. Want to go through that daily market recap, take a look at what happened on Monday. Going to get into talking technically. Big move up in the 10-year Treasury yield. I'm going to talk about that a little bit. And as a result, we'll get into an industry spotlight. And it's a financial group. And with the 10-year Treasury yield now starting to get on the move there, I think this is a financial group we want to take a look at. Then we'll talk a little bit about chart lists. We use the ChartList feature at StockCharts quite a bit at Earnings Beats, and show you a little bit about what we do there. Blog highlights, a couple of blogs that I want to go over. If you're not a fan of technical analysis, or you don't know if you're a fan of technical analysis, I think maybe after you see a couple of these blog highlights, you might be more of a fan. And then we'll wrap up the show with 3 you must see. But we got a lot to cover, so I want to get into that, and I'm going to do so in just a minute. I do want to point you to earningsbeats.com. If you go into our website, right here on the left-hand side, almost right in the middle of the page, can't really miss it, but we'd love to have you subscribe to our free Earnings Beats Digest newsletter. It gets published Mondays, Wednesdays, and Fridays. It is a free newsletter, no credit card required. You can unsubscribe at any time. It'll just give you a little bit of background, show you a little bit about how we look at the market. And if you take a look at these portfolios over here, they are just continuing to absolutely soar. I know that there were a lot of folks been bearish in on the market in 2020. I am not one of them. I've been bullish throughout the year, even at the depths of the cyclical bear market back in mid-March. I was still talking about a secular bull market, and we're in it. And got to be in the right stocks, though. Leading stocks and leading industry groups. You can see the performance pretty good there. If you like that, you want to check things out, you can click on this green Join Today button and sign up for a fully refundable $7 30-day trial. So you get charged $7, but a week later we refund it to you. So technically it's a no-cost trial for 30 days, but I think you'll like it. All right, we got a lot to go over, so let's take a look at this. First of all, Monday action. The Dow Jones Industrial Average up 466 points. The S&P 500 up 60. The NASDAQ 250. Mid caps 43, small caps 20. I mean, it was big numbers all the way around. These last three I just told you, all over 2% higher. NASDAQ with a slight lead there at 2.32%. But hey, S&P 500 up 1.8%, Dow up 1.68. Really good start to the week, no doubt about it. This first week of October tends to be pretty bullish. I know we started October last week, but this is the 5th. And so normally up through about the 6th, we tend to do pretty well. So maybe we'll have another good one tomorrow. As far as the sectors go, energy and technology, both doing well and both looking quite a bit different on their charts. I think energy was just oversold. Had a nice reversing candle on Friday. I think we built on that today. Energy gained 3%. Technology, I think, is just in a continuation pattern. I believe we're probably going to print a cup. You might look at this and be able to draw some lines, maybe an inverse head and shoulder, but I do think we're going to head higher and ultimately break back out to new highs. So technology had a strong day today, but still in a very strong uptrend longer term. The primary laggard today, if you want to call it that, was real estate. All 11 sectors were higher, but real estate had the smallest increase, up just 0.55%. As far as the industry groups go, the best performing industry group was the renewable energy space. You can see renewable energy up almost 7% today. Big move there in that group, and that's been a strong group throughout the year. A lot of the leaders in this group, by the way, are in our portfolios, and they're actually breaking out to new highs. So the renewable energy group, you can see, still not quite to the high, but the leaders are breaking out to new highs. Gambling stocks, the worst performing group. only down 1.3%, 1.35%. But when you look at the gains in the overall indices, not a good day on a relative basis. I think we're going to hold this gap support, though, and ultimately break back up above this 750, 760 area, which I think will be very bullish for the gambling stocks later in the fourth quarter. So we'll keep an eye on that. All right, let's keep moving on here. I want to take a look at the 10-year Treasury yield. I mentioned that it jumped. Well, there you go. It is at a, let's see, 1, 2, 3, 3.5 month high on the close on Monday, closing at 0.76%. It rose almost 7 basis points, breaking out. That's good news because money coming out of treasuries is what sends the yield higher. And money coming out of treasuries creates proceeds, and those proceeds generally fall into the stock market and lift equity prices, and that's exactly what we saw today. Excuse me. So let's talk a little bit about talking technically. I want to get into this 10-year Treasury yield and take a look at this a little bit closer. At the top here, you can see the 10-year Treasury yield, which has been going lower throughout 2019 and 2020. In the long term, in a secular bull market, the fact that we're going lower means money is rotating into treasuries, but there's also been money rotating into equities. Now, a big drop like this in the yield in a bear market would not bode well for equities. That's another reason why, and confirmation, in my opinion, why we are in a secular bull market. Even with money pouring into treasuries over the last 2 years, that should be money coming out of the stock market, but it's not. Stock market is weathering this, and it tends to weather drops in the 10-year Treasury yield very strongly or very well in secular bull markets. But I wanted to point something else out. When the 10-year Treasury yield, the direction of the 10-year Treasury yield has an influence on the direction of the S&P 500. Now, most of that is in the short term. So we're talking about here 20 on a daily chart. It's the correlation is for 20 days. So it's not for 2 years. This isn't, if we looked at a 2-year correlation, then obviously we'd be looking at something that was probably quite negative because we've seen the yield going down and we've seen the S&P 500 rising. But from a 20-day perspective, when we get these pops to the upside in the 10-year Treasury yield, that tends to carry the stock market up. So what I wanted to do is when you look at this correlation at the bottom, you might say, well, it looks like it's kind of up, kind of down, not really, that big of a difference. There's not really a strong correlation. But I want to show you something. If I take a rectangle here, make it white, and then have the fill, I'm gonna get rid of everything from plus 0.50 to minus 0.50. And you can do this with the color white on a chart. Now, if you look at that and we just get rid of all the middle, look at how often we have heavy positive correlation, very strong positive correlation. It happens a lot. How much, how often do we have really weak or inverse or negative correlation? Not very often, not nearly as often as you see that strong positive correlation. So sometimes when you're looking at the, when you're just looking at all these, the up and down, it kind of, your mind doesn't really focus. But I think taking that and getting rid of all that minus 0.5 to plus 0.5, I think helps to provide a little bit better perspective on this. Now, the other thing I wanted to mention is the bank index relative to the S&P 500. You can see it's been going down, but if we go back over here, I'm going to change this to the banks relative to the S&P 500. So now I'm going to take and look at the correlation between the direction of the 10-year Treasury yield and the direction of the relative strength of banks versus the S&P 500. Check this out. We are almost always positive. So if you're looking for a benefit, you say, well, 10-year Treasury yield's going up. That's great, except I can't buy the 10-year Treasury yield. It's not a stock. Well, banks tend to be very strong beneficiaries. If we believe that the 10-year Treasury yield has broken out, which it has in the short term, and is likely to move higher over the next couple of weeks, I think we could see some really strong relative strength in the banking group. So that's a group that I would certainly be at least considering as we go forward. And that takes me into industry spotlight. So we're going to take a look at some banks. Now, we have a lot of chart lists, and I'm going to go into the chart list in just a minute. That's a different segment. But what I did do is I ran a scan. And so I ran a scan. You can go down and you can grab the banks down here in the sectors, industries. So you just go down to the financials, grab banks, and you can hit add, which I already did. So that's where group as banks came up. Then I went in and I added our chart lists that we maintain. We do a lot of research at Earnings Beats for our members, and we keep our research and store our research into chart lists. And chart lists are a great feature here at StockCharts. And for any of our Earnings Beats members that are also extra members or pro members at StockCharts, you can download our chart list right into your account. So you can run scans against our chart list just like this. So I put our 6 of our chart lists. So we got strong earnings, strong future earnings, short squeeze, raised guidance, strong AD, and a weak AD. So those are our primary 6 chart lists that we work off of from an individual stock standpoint. And I'm going to run this scan for you. First, I check syntax just to make sure everything looks good, which it does. And then I run the scan. Now, on all of our chart lists, 27 banks are on our chart list. Now, what I would do is sort this by scooter and really stick to the banks that have strong scooter scores. Now, remember, banks have been, really, really weak. So any kind of a scooter score over 70, I think, is worthwhile maybe taking a look at, because it's probably outperforming its peers if it's got an overall scooter rank of 72, because these scooter ranks are not determined based on how you're doing versus your peers, or at least not your industry peers. The scooter scores are based on asset classes. So if you're a large cap like Citizens, then the scooter's based on other large cap stocks. Well, other large cap stocks include Apple and Tesla and all of these. So obviously a bank stock is not going to be doing nearly as well as those. But if you get one that's still in the 70s among its large cap peers, that's probably not a bad stock. Regions Financial, same thing. So let's pull these 2 up first. Well, we're getting close. This has been a pretty nice move here over the last week or so, and we're getting close to a breakout above 28. So this is good. The bad news is, and I'm sure we probably will see this among many banks, is their accumulation distribution. There's just not been a whole lot of accumulation taking place in banks. I think that most institutions have been distributing throughout the year, throughout the pandemic. So even when the stock here was going up in March through June, that's a pretty big rally. Look at the AD line going down. So it was a rally, but it wasn't accumulation. It was actually distribution. And that was one of the things that was most important since the pandemic lows back in March. It hasn't, I think it's been really important to differentiate between stocks being accumulated and stocks being distributed. And it doesn't come down to which ones are going up, which ones are going down. You got to really follow this AD line. But anyway, CFG is potentially ready to make a breakout. Now, would this be one of my favorite stocks in the market? No. But if the 10-year Treasury yield continues moving higher based on Monday's breakout, then yes, this is a stock that could do very well in the short term. Now, if it were to run up into that 30 to 32 area, I'd be out. I wouldn't take my chance. As a trader, I would be out and just wait and see if you get that breakout. Another one, let's go back to the results. Regions Financial. All right, Regions Financial, you can see making a breakout. So this one actually did break out above this double top. That's pretty bullish. I think Regions Financial looks pretty good. If it were to pull back to about, I don't know, maybe 12.10, 12.20, I think that would be a really strong entry point in the short term for a trade. Again, once again, I'm assuming that banks are going to do well because of the 10-year Treasury yield. Look at the AD line. Not a stock that's been heavily accumulated, that's for sure. All right, let's keep moving on. Look at Cadence Bancorp. Now, this is a small cap, but it's trying to break above these recent highs at 10 and doesn't have much further to go to take out that June high. AD line, still not particularly strong. Sorry. Ally Financial. Now, this one's broken out not only above recent highs in August and September, but also above that June high. AD line, not particularly strong, but I bet this one looks pretty good on a relative strength chart among its peers. So let's take a look at that. Look at this. Ally relative to the bank index, straight up. So if all of a sudden banks become a leading group over the next couple of weeks, maybe a week, 10 days, this is a stock that's one of the leaders in the space. And volume trends, I think, look pretty good. It's still got some work to do, like I said, with the AD line, but this has been a pretty nice looking chart. Last one, Mr. Cooper Group, COOP. Very, very nice. I mean, this is breaking out to an all-time high. This one looks really good. The AD line actually set a high in August. So this has definitely been one of the stronger banks. Look at the heavy volume that's been coming in on the push to the upside as well. I think Coop looks pretty good. So those were just some of the stocks that you could take a look at, based on the banks. But I think if the banks go higher, you can make money on a lot of the different banks. But watch that 10-year treasury yield. That's going to be really important. All right, let's move on to chart lists. So I mentioned that we have these chart lists. This is our strong earnings chart list. And if I bring this up in edit form, you'll see that we currently have 472 stocks on this chart list. This is a chart list of companies that have beaten Wall Street estimates as to both revenues and earnings per share in their latest quarter. They're liquid, meaning that they trade at least a couple 100,000 shares a day on average, and they look decent, or maybe even a lot better than decent. A lot of these are leaders in their industry groups. So I want to make sure the technical picture is good, but also it's really important that the fundamental picture be good and that they beat estimates. I like management teams that underpromise and overdeliver. Apple's been doing it for years. I want those companies that do that. When they no longer do it, they come off the list. So let's go back here, and this is the strong earnings chart list, and this is in summary mode. And you can see, you can sort it based on percentage change. So look at all these stocks here that have had really big moves today. These are all the positive, the best stocks in this chart list today. If I click on this percentage change column again, now these are the ones that have had the worst days. Well, the worst one's 5%, and there's only 3 that have been down more than 4%, only 6 down more than 3%. And in the meantime, if we go back to the winners or the gainers, I mean, we could go down this list, but I mean, look at all these stocks over 3%. I mean, you can see why having this chart list is a pretty good feature. And again, we do all the work. I can promise you that I spend hundreds of hours each quarter putting this chart list together and maintaining it. We update it periodically throughout the quarter as earnings come out. So just being able to literally come in, sign up for a trial, and download this into your account is well worth it. Well worth it. But this is just one chart list. So what I wanted to do is just give you a quick analysis of the best performing stocks in each of these various chart lists. I'll try to go through these very quickly. So in the strong earnings chart list, here you go, VIR. I know a lot of people look at this when you see selling and below the moving averages, you think bearish thoughts. Look at where it turned, right at price support. See the breakout above this 2750 area? Every time we go down to 2750, we hold. So VIR, I don't know that it's a buy here, but definitely at 2750, it was a buy because you could keep your stop very tight. The worst performer, as I showed you, DOYU, DOYU International Holdings. Now this one, it has broken down below that price support area, and it's below the 20, which is below the 50. It does have a strong AD, so if we can get back through the 20, that would be a positive. In the short term, though, I'd just be a little cautious with it. It may run down to test this prior low, which would be down $11. On our short squeeze chart list, best performer, I tell you, this thing has been on fire. These renewable energy stocks, especially the ones that are heavily shorted, another chart list that you can download right into your account. When we get breakouts on these short squeeze stocks, they explode. Look at the volume coming in here on SunPower. Jinko Solar, I've been just talking about this almost every day. Look at this move to the upside, and look at that heavy volume. Massive short squeezes. Worst performer among the short squeeze stocks, AMC Entertainment. going down, getting closer to a pretty key area of support between about $3.75 and $4. Really needs to hold there. If you wanted to take a shot on the stock, that's where I would do it. But, you know, this is on the short squeeze chart list, but notice, you know, maybe back in here when it had a breakout and had some pretty good volume, looked pretty good. But here, look at the false breakout and failure. Then we come back down. I think $3.70 to $4 would be a good entry. But other than that, I would be careful with AMC. Strong future earnings chart list, BE. And this is interesting because on Monday morning, when I did my Trading Places Live over at Earnings Beats, I talked about this stock. It was actually one of the worst performers in one or two of our chart lists when it pulled back to that 20-day. But I said, hey, you want to be careful and watch this thing, because if it breaks out, this could be a really strong candidate. This is heavily shorted. I know this is on our strong future earnings chart list, but it's also on our our short squeeze chart list. A close above 19 would be very, very bullish. And if you see the volume was strong today. If the volume is strong and it goes through 19, it could really run. The worst one on this list was EVH, and it seems to kind of be rolling back over again. I don't know, close below 1150 to me suggests maybe we'd see 950. So this one's not looking particularly bullish, and the heavier volume on this pullback bothers me as well. Accumulation distribution hasn't been that bad, though. So if it could get back up above the moving averages, then maybe it could right the ship. Strong accumulation distribution chart list. The best performer, CYTK. Look at this move. Now, this is one of the reasons why we follow the AD in our strong AD portfolio, which has done extremely well. It's based on these companies that show strong ADs, just like this one. Look at the pullback for 2.5 months. We were down at about a 3 or 4 month low here. And look at the AD line. That to me is indication of accumulation. The stock, huge day to day, up 19%. False breakout, so it might pull back in the near term, but I think eventually we're going to get that breakout above 29.30. MHO, home construction, not very good today. I think it's temporary. I think we consolidate here. This is a nice looking chart. I think anything back down around 41, 42 would be very interesting. I don't know if we go back that far, but this is a stock that I would be interested in on a continuing pullback. The weak AD chart list. Now, this one has actually righted itself. It was weak back in March when we developed this chart list, but it's gotten a lot better now, and it's gotten a breakout. So I think this is definitely a turnaround candidate over the past few months. The worst performer today in the weak AD list, look at this. AD line back at a 52-week low, stock rolling over. Most of these stocks in the weak AD chart list, we don't want any parts of. Raised guidance chart list. This is another one where we do the research, let you know which companies have been raising guidance. Big Commerce Holdings had this huge move, pulled back. It's starting to strengthen again. Nice move up in the AD line as well. And then the worst performer, and this is one I talked about Monday morning as well on Trading Places Live over at Earnings Beats. I would be careful in the near term with this stock, DraftKings. It's been a huge winner, but they did come out and announce a secondary offering. Stock was down about 5%. Most of it came at the open. I would not be surprised to see this continue to move lower in the near term because of the selling shareholders. All right, let's move on to blog highlights. I'm going to show you a couple of these. We got to hurry here, just about 5 minutes left. But I said I was looking for 3 companies that could have moves, big moves into earnings. And UPS was one of them. It was at 166. If we pull up the latest, we're at 169. So not exactly a huge move up at this point. Whoops, wrong screen there. So let's go back here and let's get out of this. Let's go to INOV. This is a software company, Inovalon Holdings. Stock was at 2607, making a breakout here. Volume, not bad, but the stock closed 2740. So it is starting to head in that direction for sure. And then let's see, next up was AMD. So AMD was 78 and change, 86.15, almost since the time the article was published. This thing's been almost straight up. AMD, I think, is in a stealth move to the upside in prep for its next earnings report. We'll see whether or not that continues. All right, let's keep moving here. The other blog I wanted to show you was another Chart Watchers article back September 11th. And by the way, if you're not a Chart Watcher subscriber, go to the bottom here and put your email and sign up. And if you want to get my articles, which sometimes come out on Friday evening before the Chart Watchers gets published, you can go down here and subscribe. And when you subscribe, as soon as I publish my article on Friday, it'll be sent to you. But I wanted to just point out that I looked at the downside potential on the S&P 500 three different ways back on September 11th. I think, yeah, September 11th. One was watching this channel line, which came in right at 3,200. I'm going to show you that in a minute. Another was Fibonacci. Now, I didn't look at that third one, but the third one, 3,200, we got pretty close to that level eventually. And then finally, the 20-week EMA, which was at 3,216. We went down to about 3,210. And I want to show you this channel that, once we update this, look at the channel line. I extended that channel line that I had drawn. This red dotted vertical line is when the article was published. And so this is what I was looking at. Now look at, as I extend this line, notice the selling that continued for the next week. I mentioned I thought we might have one more low, and there it was. Went right down to this trend line and then started to turn right back up again. So in that article, I was looking at 32 to 3,300 as my low for those three reasons. And, the stock was, or the index was over 3,300 at the time. We did go to one more low, hit that channel line, and we have been going higher since. Technical analysis is where it's at. This is coming from somebody that practiced public accounting for 20 years. So really important, I think, that you realize how important technical analysis really is. All right, 3 you must see. Let's wrap this thing up. I'm going to start off with Plug. So on Plug, and this is in that renewable energy space, which has been on fire, renewable energy starting to roll again to the upside. Plug Power has been very strong on a relative basis, broke out today. Big move up, more than 11%. So this is one of those that had a couple tops up at about 14 bucks. We might pull back to that 14 area. That would be about a 10% pullback. I think that is probably going to be a level that holds on this stock. So I like Plug Power. It is very aggressive though. HOME. So this is At Home Group. Now I mentioned At Home Group not too long ago. I don't remember where, because I talk about stocks on these shows. I write about it. I do blogs. I can't keep track sometimes of where I talk about a stock, but I really liked At Home on this pullback. The AD line was at a high back beginning of September. We pulled back to the 50-day moving average. Look at the last 2 days, big hollow candles. Certainly going to help, especially if volumes start to pick back up again. We'll see that AD line starting to roll higher. At Home, I think looks really strong. The last one, another strong stock, Whirlpool. Got that high back in mid-August at about 185. We've been coming up, testing it. I think we got a little cup, little handle, broke out of it on Monday. Look at that volume pickup. We got a group that's breaking out. The AD line here is good. Relative strength is strong. I really like Whirlpool here. All right, that is it for me today. Make sure you go over to earningsbeats.com, sign up. Got a lot of good information. I think you would enjoy it. Everybody have a great day. Be back on Wednesday over at Earnings Beats for your next Trading Places Live. Happy trading, everybody.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.